How do we help at Tradespoon? Again, we have a community of traders. We have wealth managers. We have people who traded 40 years, people who traded 4 days. So there is a lot of wealth of information. People's research have access to institutional research. I encourage you to participate in our morning live trading room. Right, we have a live trading room every morning, and first hour of trading session and the last. We have YouTube. Right, well, Elite is a paid subscription, so you do have to have a paid subscription. YouTube is a free subscription, right? You just go to YouTube, click on subscribe, click on like, please share videos. If you think this video today was useful to you, if you think it's going to make you a better trader, better investor, then I would ask you, do me a favor, just share these videos that you like with any community that you're part of, whether it's a Facebook, Instagram, TikTok, I don't know what it is, Wall Street Mavens, but share it on the social media. That will help us to spread the word and help Tradespoon grow and help traders trade, right? So that's one resource is YouTube. The other one is paid subscription. Every day, I encourage you to invest into education, right? So watch the morning bell, watch the closing bell. If you have time, great. If you don't have time, there are recordings, right? And in the trader log, basically shows you all of the orders, all of the positions that I have, including SMS messages, right? So you can go back last 7 days, just see what happened, right? Okay, I'm doing iron counters, right? Right now, volatility is rising. You sell premium, whether it's around earnings or around an event, right? Yesterday, market goes up 2%, you sell calls. Market dropped 2% today, you sell put spread, right? So that's the strategy. Silver is one way to hedge, still trading around silver, because I think silver in the past 14 months traded as a metal. Now it's trading as a safety. Every time market sells off, let's just confirm that silver, I think, should be up today. Right? I didn't even check, but yeah, I'm going to make a bold assumption. Silver is up. Why is silver up? Recession trade, right? When silver is down, people feel like there is no recession. When silver is up, majority of the people feel that there is a recession, right? And same thing with crude oil. If you look at the crude oil, it's a 60 handle, right? Precipitously dropped. It took off December lows, right? I would pay attention to small cap stocks, right? That's all recession trade. We are slightly right at the December lows, right at the October lows in small cap stocks. Another place where contagion can spread, right? Where balance sheets are important. And small cap stocks obviously don't have a strong balance sheet as large, well-capitalized companies. So you can hedge with put spread, right? You see that sometimes I hedge with the put spread, or this was actually bullish trade, or it was SH, right? So I closed XLF, right? I was bearish on XLF, bearish on SH. Short term, I was bullish on QQ. I still have a close March, rolled it into April. So I still have bullish April call spread. So you can see all of my trades, you get SMS messages, but again, everything is in the context. This is what I do, but that doesn't mean this is what you should do, because right, we're managing a different amount of money, we have different experience, we're at a different point of our journey. The only way you should trade in this type of environment by investing into education, by either watching the morning bell and closing bell or participate in recording. We send out video blog, we send out regular blog on daily basis. This is something I encourage you to review, because it's all about risk management right now. Nothing else is important, right? It doesn't matter if you're right, whether it's soft landing or hard landing. What you need to make sure is that you have ample amount of cash. If you still believe in soft landing, great, have 30% of your portfolio in cash. If you believe in hard landing, well, then cash should be higher. I would encourage you to consider 50% of your portfolio in cash. And then portfolio drawdown. Very simple concept, very difficult to get. I propose on average, you should not have more than 4 positions, especially if you just start trading, and no more than 2.5% of account value at risk, right? So this way, if you're on the wrong side of the trade, if the market rallies 10% next week, or if the market sells off 10% next week, you're not going to be down more than 10%. So risk management, deciding on cash, number of position size is extremely important. I encourage you to keep a journal, write down all your trades in journal, have a tally of total exposure, right? If you're trading options, you know, you can assume 50% stop loss, right? That's what I usually do and I usually advise. But what if